Welcome to InvestorHubX.com. In this video, we're going to guide you step by step on how to enter a trade using price action. Step 1 is to identify the trend. Make sure we are trading with the trend. Step 2 is to identify a key level. Step 3 is to observe price action. Step 4 is to look for trend change confirmation. Once you've identified these steps, the final step is to enter the trade. This simple process helps you stay disciplined and removes emotion from your trading. Let's get started. Step 1. Identify the trend. Always trade with the trend. This is McDonald's stock on the weekly time frame. Notice how price is clearly in an uptrend, making higher highs and higher lows. This tells us buyers are in control. Before we think about entries, indicators, or patterns, the first thing we do is make sure we are trading with the trend, not against it. Step 2 is to identify the key support and resistance level. Key support and resistance levels on higher time frames are considered high-quality levels. The level here is obvious. We can clearly see swing highs and swing lows, with multiple rejections at this price in the past. This is a very high-quality setup, because previous resistance has turned into new support. This concept is known as role reversal. In addition, we can also plot the 50-week moving average as a form of dynamic support. It's called dynamic because this support level moves with price over time. Coincidentally, this is where the key horizontal level and the 50-week moving average meet. This creates an area of confluence, a zone where different schools of traders are all watching the same price level. When multiple factors align like this, it increases the probability that price will react at this area. Step 3 is to observe the price action. This is the first area we look at. Notice that price is in a very strong downtrend. The red candles are growing in size, with each bearish candle closing larger than the previous one. This shows increasing selling pressure. There are very few rejections at this level, and price is also below the 50 weeks moving average. So despite being at a potential reversal area, the price action is telling us that sellers are still in control. This is not a high-quality trade setup, so in this case, no trade. This is the second area we look at. Notice that price is still in a downtrend, but this time the red candles are getting smaller in size. This tells us that selling momentum is weakening. We can also see multiple rejections forming at this level, showing that sellers are losing control and buyers are starting to respond. Although the price is below the 50 weeks moving average, this is a potential key level where price may reverse. So in this case, this is a good quality trade setup. This is the third area to look at. Price has broken above a key resistance level and turned it into new support, making this a strong reversal zone to watch. We can see multiple long wick rejections in this area, showing that sellers are losing momentum and buyers are stepping in. Price is now in an uptrend and is trading above the 50-week moving average. At the same time, the 50-week moving average is aligning with the key horizontal level. This creates an area of confluence. When structure, trend, price action, and moving averages all align like this becomes an A+ trade setup to watch, with a high probability that price will react from this area. The fourth step is to look for trend change confirmation. In this area, we see a weekly hammer candle, followed by a bullish spinning top forming at a key support zone. This sequence tells us that selling pressure has been absorbed and the trend is likely about to change. Similarly, in this second area, we again see a weekly hammer candle forming at an area of confluence and a key support level. When reversal candles appear at important levels like this, they provide confirmation that the market is transitioning from selling to buying. This is the final piece of evidence we look for before considering a trade. The fifth step is to enter the trade. After we get trend change confirmation, we draw a trend line like this. When price breaks the trend line, this is where we enter the trade. Let's walk through it again. Trend change confirmation, price breaks the trend line, enter the trade. This keeps the process simple, objective, and repeatable. To summarize, here are the steps to enter a trade. Step 1 is to identify the trend. Make sure we are trading with the trend. Step 2 is to identify a key level. Step 3 is to observe price action. Step 4 is to look for trend change confirmation. Once you've identified these steps, the final step is to enter the trade. This simple process helps you stay disciplined and removes emotion from your trading. If you found this lesson helpful, please give the video a thumbs up, subscribe to the channel, and turn on notifications for future lessons. I'll see you in the next video.